Hello there, it's John Salmon here, partner at Hogan Lovells and co-lead of our global digital assets and blockchain practice. And I'm very excited to have with me today Sharon Lewis, my co-lead, and Lawrence, the executive chair of Global Digital Finance. Sharon, do you want to introduce yourself?
I think you've done it for me, but I'm Sharon Lewis. I am a partner in our capital markets practice in Hogan Lovells, and I have the pleasure of co-chairing our digital assets and blockchain practice with John, and also the pleasure of sharing a lot of my time with John with Global Digital Finance. So over to you, Lawrence.
And I'm the chair of Global Digital Finance, and it's a pleasure. We're in our 8th year of Hogan Lovells GDF partnership, particularly on all things related to consultations, advocacy, working papers. And that's after 3 years at Innovate Finance when I first met you both. So I feel we've had a decade of technical advocacy work in the global community, not just here in London, but in Paris and in New York. And we've done a lot. We've gone to Davos. We've done most of the larger conferences and fixtures. We've done United Nations, Climate Week. So it's exciting to be here for the 6th Hogan Lovells GDF Summit.
Great. Thanks, Lawrence. And Lawrence, just to maybe kick us off, what's your kind of impressions of what we've done in the last year? Because it seems to be like a runaway train in the digital assets world.
Everyone has focused on the influence the new US administration had coming in last year, and particularly accelerating crypto regulation, the Genius Act of stablecoins and Clarity Act, which will hopefully give us better guidance on the infrastructural requirements for securities v commodities and how we regulate spot futures markets for both of those as it relates to crypto and digital assets. But I think in the GDF community, in particular, the work that we've been doing, John, on the payment stream, all of the work around stablecoin consultations, which Elise Susi, our executive director, has run, and I can't remember how many stablecoin consultations out of the 31 consultations we've already done in 2025, but a number of them have been stablecoin consultations. And I think there's no question that stablecoins have really become the killer app use case for blockchain. And, really most people, I think, suspect will just replace the traditional payment rails. So that's an exciting area we've been working on. The second one, and I think importantly for us folks with a capital markets background, when we go back to John, even thinking about you and I writing, early codes of conduct or stuff around tokenization, collateral mobility, which is not the most exciting topic for many listeners, has really arrived, and it's arrived in an important way in that we've demonstrated with this new public blockchain technology that we can actually mobilize eligible collateral and settle with a degree of legal certainty and finality in a multiple number of use cases. And, as importantly, some of the use cases that are popping up related to counterparty insolvency and avoiding the months of bureaucracy that one needs to do to reclaim one's assets and complete transactions. So there's a huge community report coming out over the next few weeks, and it's something that we'll talk about, I think, a bit more going into Q4. I do have to get a plug in for the working group as well, which, from my perspective, has run the most important industry sandbox. I think we've had over 35 Tier 1 FIs from New York, London, France participate in it, a number of the digital custodians, blockchain firms, third parties. And we've demonstrated the use cases that we can actually, in essence, mobilize our collateral and settle it. It's being done now. And everyone, there's so many people that have involved, but BlackRock, State Street are at the top of mind, R3, Fireblock. So it's an exciting time, I think, for digital assets. And I know Sharon is saying, boy, we've really seen institutions, turn a corner on this and really focus on adoption now.
Yeah. I mean, it's been amazing, actually. I think really pushed by the US and where the tokenization of money market funds has just rocketed over a very short period of time. But actually, there's a lot of legal and operational and accounting work that all goes behind that. And so, Hogan Lovells has been delighted to work with this huge team on this report. And I think, it's very boring, but it's really important. When you think about collateral, you've got to think about, well, what am I issuing? Can I issue it?
Yeah.
Once I know that I can issue it, can I transfer it? It sounds a simple question, but actually the answer's not always straightforward. And once I can transfer it, can I use it as security, which is actually key to capital markets? And then, of course, if the issuer goes bust, can I get my money? Have I got my collateral? And so those are the questions from a legal perspective that we've been working on a cross-jurisdictional basis. And I think we really are getting there.
Yeah. I mean, it feels very different from last year. We had a dinner last night with many of the speakers that are going to be here today, and we're reflecting on the changes that have been made in the last year. But last year at the summit, and every year I think this is the year that we're really going to see adoption. Last year, I said, we're moving from POCs to adoption, and then it didn't quite move as quickly. And it's just amazing what's happened in the last year. And I think it is that. I think, Sharon, you're absolutely right. Is the US has driven a lot of that, but I think it's also just everyone's a bit more comfortable. I think everyone's a bit, having that regulatory certainty with the EU, US, and UK coming soon. I think everyone's thinking, yep. Let's embrace this. Let's do this. And certainly we see, I think, a number of our global institutional clients, right, Sharon, now quite significantly pivoting to reflect the market and the regulatory change.
Yeah, there's a huge change in mindset. I think that prior to the new US administration, there was a fear of the long arm of the US DOJ, a fear that basically, even if things were being done in the UK and or in Europe, that somehow there would be a US connection via the blockchain, for example, and just a huge reluctance to move forward in a climate where basically it was ruled by enforcement. And you can really see a change in mindset. People who didn't want to engage at all are now very engaged. And I think there will be, this time next year, a real, not hurricane, but a blast of change.
You both raise very good points about adoption, but it was 10 years ago at Sibos, which again is happening next week, that blockchain really was the big theme. Banking CEOs a decade ago were talking about how blockchain was going to solve all sorts of problems because of the elegance of a digital ledger and the way the infrastructure is constructed. And so I think, we have a general view in our community that in highly regulated businesses, it actually takes 30 years to change the plumbing because you need to run both sets of rails or the old plumbing with the new plumbing for a period of time to get some degree of certainty that the new plumbing really does work. And so, Sharon, you raise a really good point because I actually think one of the reasons post change of U.S. administration things have moved so fast is that many FIs, not just the blockchain and crypto firms that have been in the space and leading it for the last 15 years, but many FIs have been well prepared. Certainly tier one banks and custodians. They've been running POCs and pilots for a number of years. But it has been, particularly over the past 4.5 years in the U.S., the impending threat or the disincentive to do anything. That's, really resulted in an interesting ecosystem. As we know, a lot of the banks have their own private protocols, which actually run contra to the benefit of public network technology and engendering, the participation, getting the economics down, et cetera, et cetera, et cetera. So I think, one, we've seen them unpack all of the experience and the technology they have now, that the green light is that, boy, this technology is important. Two, many of them are scrambling to make sure that they've got a relationship to public networks and technologies and that they've got a bridge from their private token islands. And interoperability has been our, perennial theme we've had anyway for a number of years, John. So I think what we've witnessed is that's all come together. And, where we know you start with typically 2.5% of a population being early adopters, moving to about 7 or 8%. Well, the three of us in our teams have been on that journey really for the last decade with all of fintech, and we're moving into a period of statistical mass adoption. I think to your point, Sharon, what we've seen is some of the later tier 1 or tier 2 companies who haven't been as prominent now embracing things. And that, I think, is a great benefit to consumers and businesses now. It looks as if really the industry, each of the sectors now have said, okay, it's safe to go in the pool. We're gonna make a move.
Yeah, I think it's a great point, Lawrence, around preparedness. And I think you're right. I think, a lot of the big institutions have been experimenting, been doing these POCs, have got themselves mentally and technically ready. I think one of the challenges that we're going to see, as Sharon said, I completely agree, there's going to be a blast. Blast seems more helpful than a tsunami but a blast of new, I think particularly we heard last night that predictions are the Clarity Act will be done by Christmas, right? So that again is going to be another kind of shift in momentum. Absolutely. So I think one of the real challenges we're going to see is for institutions, global institutions, is the sort of geopolitical versus this global use case, right? Because all of our clients want this to be global, and by nature, this is global, right? So how does one service that when you've got the US doing their thing, the EU doing their thing, the UK doing their thing, and they're not necessarily politically and philosophically compatible, right? And I think that's going to be an
Asian
challenge.
Dubai as well.
Yeah, absolutely, Sharon. Quite right. I mean, and I think, again, we hear from clients that they're concerned about the jurisdiction they might be in without picking on one, but the US is just moving at such a pace that everyone else has to respond, and people need to figure out, where do we set up, how do we, and it's not always straightforward, to understand how all these things knit together. And I think that's going to be the real challenge over the next sort of 5 years, is as we move this forward.
Yes, and I'd add to that. In our community, we always start with digital as borderless.
Yeah.
So to a larger extent, the change management, whether it's bank mid managers and some of the barriers we were speaking about at dinner last night, the practical change management issues, which we've all been through, certainly at our vintage, and looking at the clients or institutions.
I don't know about you. I'm very young, Lawrence.
Well, I am as well. I was speaking of John there, trying to be respectful. But this is a very important point, because digital is borderless. And I'll pick up the sandbox in the tokenized money market fund working group again. With over 40 institutional, regulated, unregulated participants working together, demonstrating, eligibility, mobility, and settlement finality, we didn't need regulators, and we're doing it all within, the legal frameworks. And, again, thanks to Hogan Lovells and the work we've done around the framework of legal certainty was important to underpin those, pilots that were done and those tests in the sandbox. But the reason that I say that, in the context of this whole timing and how we work with cross-border stuff, I think industry is in a position now where it's reasonably confident that it can work things out. And, we've all worked in the capital markets for many years. And so legal arbitrage is basically how money is made. And now we've got legal arbitrage with a new ecosystem where we're chasing new inflation around. I mean, the yields in this new ecosystem are really important because of the way inflation moves around. So I think this is a fundamental change of thinking for people. But what I'm certainly confident about, and I've been more on the non-banking financial institution side of life now for many years than the regulated side of life. And what it demonstrates is that, look, smart capital finds a way of making this stuff work pretty quickly, even where we do have a longer tail or barrier of resistance, either for legal regulatory issues or just institutional or systematic barriers for change. So it's an interesting time, and it'll be an interesting one for our children to, pick up and live in.
That said, I think there's still a fair amount to do.
Yeah.
If I take the UK, one of my big bugbears, as everybody knows, is that we still have a paper capital markets. So, on my priority list is to bug anybody who will listen to me about the fact that we need to drop that paper. And as a capital markets lawyer, really, as much as you can actually push for the digitalization of bonds, that will not happen until there is the digitalization of payments and we deal with the cash leg. So I think there's still a bit of time to go.
Yep.
But I personally believe that the wind of change blowing from the US is going to force our regulators, our politicians, our communities to go quicker.
Yeah, agree. Totally agree. So thank you very much, Lawrence, for joining us. Thank you, Sharon, as ever. I hope you've enjoyed this summary of some of the key issues that we're going to cover at the Digital Assets and Blockchain Summit today. And thank you very much for watching and listening. See you next time.